What's up, stackers? This is Silver Slayer. Welcome to your daily silver stacking video. Thank you so much for tuning in. I have by far the craziest, most important video you'll ever watch regarding silver prices, what's actually going on behind the scenes, and how corrupt the system really is with the government. This article doesn't just talk about spoofing. That's where most articles about price manipulation stop. Banks like JP Morgan, Merrill Lynch, the Dutch bank, all placing false buy orders on these exchanges, canceling the order before it goes through. That's where everyone stops when it comes to price manipulation. But this guy's saying it's much deeper, much more sinister. Let me read a paragraph from this article. There is arguably another form of manipulation in the precious metals markets which is far more influential in subduing price discovery, and which takes the form of the very structure of how these markets trade vast quantities of futures contracts and synthetic and paper gold and silver positions that are completely unconnected with any underlying physical metal. So as you can see here, this guy's really talking about some stuff that no one else brings to the surface, and hence why I wanted to make a video about it. So we're going to go over this article. I really hope I put together a great video for you guys and gals today. Hopefully you're going to enjoy it. You definitely want to stick through because it's pretty lengthy, but he brings up different topics. As you can see, all these different portions are bringing up different types of points that are all relevant. But I also wanted to mention that if you want a chance to get some silver shipped straight to your front doorstep for free, all you got to do is click one button. I'm doing a 55,000 subscriber silver giveaway. The entry video is live. Links in the description or the pinned comment. May the luckiest stacker win. So gold and silver price manipulation, the greatest trick ever pulled. Talk about a title. There is probably no other topic in the gold and silver markets which incites heated debate more than the subject of precious metals price manipulation. Hence why I cover it a lot, because I'm probably the most controversial silver stacking channel on YouTube, and that's because I'm going to talk about stuff that no one else will. If the markets aren't always rainbows and unicorns, I'm not going to portray it that way. I'm going to tell it how it is. If it's looking like silver prices are down bad or something's going to hold the prices down for a while, I'm going to say it. But that prices in the precious metals markets are manipulated is not speculation. It is fact. A fact made clear again recently by the Commodity Futures and Trading Commission, which is the CFTC, ruling against investment bank Merrill Lynch Commodities for spoofing prices of gold and silver futures contracts on the COMEX exchange. Now, most of you probably know what spoofing is if you've ever watched a price manipulation video. It's when banks use millions of dollars to go on an exchange, place a buy or a sell order, they cancel the order before it goes through with the intent to cancel it. Before they even place the order, they know they're going to cancel it. So the volume on that exchange goes a lot higher so that it influences other people that are also using that exchange at the time to invest differently. But then they cancel the order, so it's almost like a false market at that time. The trickiest part is you're allowed to cancel buy and sell orders. So how can you catch someone with the intent that they were going to do it before they even placed the order? That's the tricky part. JP Morgan is the mascot for this. They've gotten caught for decades. 3 of their employees got sent to prison last year. Their most recent fine was $900 million. Another employee actually got sent to prison as well for racketeering. They're the shadiest bank in the world. Jamie Dimon, JP Morgan, all bad news. But beyond the profit and greed driven bullion bank manipulations, gold and silver prices, this guy writes weird. This is how he wrote this. But beyond the profit and greed driven bullion bank manipulations, gold and silver prices, okay. There is also the issue of central bank policy interventions to suppress the gold price by outright gold sales or using the opaque and secretive gold leasing and lending market. This is less talked about manipulation, or this is a less talked about form of manipulation given the secrecy of everything to do with central banks and gold, as well as the reluctance of the financial media to broach the subject and a reluctance of regulators to go there by even looking at the central bank gold market activities. So basically saying, this is a lot of this is swept under the rug. It's behind the scenes and people aren't going to talk about it. So that central bank operations in the gold market has existed is also a fact. This guy writes really weird, by the way. So if something is kind of off, it's how he's writing it. But anyways, with such operations covering price smoothing and price stabilization, price pegging, and coordinated gold pools, see Bullion Star articles, which is talking about a lot of different things. The new gold pool, part 2, gold pool versus oil, blah, blah, blah. There's also an ample evidence about central bank manipulation documented in various places, including the GATA website. Motivations for central bank interventions include protecting the existing financial system, engineering low real long-term interest rates, and preventing gold acting as a barometer of inflation. And that's actually when I was talking about why the U.S. Mint's in such a bad position. It's one of the points the guy was making is because the United States is trying to hold down the cost of its $30 trillion in debt, and if the U.S. Mint changes, or if they change the laws allowing the U.S. Mint to pay higher prices than the world price, then that would affect the government. That would affect the Federal Reserve, and that's not going to happen. And the guy even says, this situation isn't going to go away anytime soon, which is pretty bad for the U.S. Mint since they're already in murky waters going up against Congress. But anyways, that's a whole separate video I just made. Merrill Lynch spoofing, or Merrill spoofing Lynch. That's funny. Turning first to the most recent Merrill Lynch case, in late June this year, the CFTC announced that it had fined Merrill Lynch $25 million for manipulating gold and silver futures contracts on the COMEX from 2008 to 2014. This was done thousands of times, according to the CFTC, thousands of times. And that's just one bank. And that's not even the biggest bank known for doing this. Thousands of times. We're talking millions and millions of dollars being placed on these exchanges that is all fake money. It's all fake. That, and it even says it right here, right? By creating artificial demand or supply, thus false prices, this interfered with the already broken precious metals price discovery that would have otherwise occurred. Interestingly, though, not surprisingly, much of the direct evidence the CFTC used in its verdict was from the log files of trader chat apps, right? Because, you can't catch, because how can you prove someone's spoofing when you're allowed to cancel orders? And let's look at this is one of the chat apps they caught one of these traders using, which was, he was quoted saying, "Guys, the algos are really geared up in here. If you spoof this, it really moves." With a lot of money for most people, $25 million fine is a paltry amount for global investment banks such as Merrill Lynch. And that's exactly what I was talking about, which I'll go into a little in a second. However, the ruling at least demonstrates that what many always thought about precious metals futures price discovery is being rigged and manipulated is in fact correct. And they also got a $25 million fine, but that's a slap on the wrist to a bank. I vividly remember when JP Morgan, the first time they got a real penalty. I remember the article when judges started saying they're going to crack down on spoofing and fine these banks harder because, $25 million, that's nothing. A $900 million fine, that's something. 3 of your employees getting sent to prison, that's something. It's easy to hide behind a screen and do this, but when you realize your life might be at stake getting sent to prison, it might make you second guess it. So it goes into usual suspects, talking about the Dutch bank, like I mentioned, Merrill Lynch, and JP Morgan. Those are the 3 banks known for it that I can go off the top of my head with. Those are the 3 ones that are always in these articles in the news getting caught. I'm sure that there's other banks. I'm sure there's other whales, right? Single people that are doing this themselves. But anyways, yeah, let's keep going. So the fix is in manipulating the gold and silver benchmarks beyond the gold and silver futures markets, but interfering with futures. A similar group of bullion bank traders are, not surprisingly, also involved in antitrust court cases alleging that these banks manipulated the London gold and silver fixing benchmark auction prices. While these cases are still winding their way through New York courts, they have not yet been fully ruled on. The chat room transcripts on manipulative price collusion can only be described as shocking. Chat transcripts, which anyone who bothered to think about it or think about knew it existed from at least 2004. 2004. That's crazy. That's crazy. I mean, if you think about that, like how long has this been going on, and how much has this really affected the price of silver? My co-host on the Silver Stacking podcast, he's becoming a CFA, a chartered financial analyst, so he knows a lot about this. And I asked him, to what extent are silver prices manipulated? I think I direct the question more towards, when this happens, what is it? Is it a long-term effect? How does this work? And he says basically like this, right? He says this happens, and it's a very brief period before the market corrects. And he kind of explained it as, silver prices are pushed and pulled by so many different things. So when spoofing happens or this happens, it could be for a weekend. You'll see the price do something very weird or unordinary. But then it will kind of fix itself. And that's just in that 3-day period, the bank's, making tons of profit. But I'm sure even like this article is saying it's much deeper than spoofing. Prices could be completely in a bubble. But then we have this article right here where this guy's saying that manipulation might finally be ending, and other variables in sight coming up will be more powerful than whether a bank is placing false buy orders or not. So the case in question have brought by groups of precious metals investors against the London gold fixing and London silver fixing companies with allegations that Bank of Nova Scotia and HSBC manipulated silver prices from 2007 to 2013. And Scotia Bank, I mean, holy crap, it looks like almost every bank has manipulated the price of silver. And silver is easier to manipulate than gold, since silver is a much smaller market, takes less money. And this is even an article titled "How to Trigger a Silver Avalanche by a Pebble." Wow, that is crazy. Trader A quoted, "Gonna bend this silver lower. I will bend it lower. Told you. Ha, cool. It's gonna get ugly." Wow, that's so sickening. Use the blade on silver right now. No, it'll hold up. Gonna blade silver now. Another Dutch bank trader B instructing trader A, "Today you smash." Trader A, "An avalanche can be triggered by a pebble if you get the timing right. And silver's still here, you can easily manipulate silver." This is sickening. This is sickening just to think that these guys have the power and the audacity to just, money will make anyone do anything. Anytime there's money involved, any investment, there's going to be shady, corrupt people behind the scenes. But man, that is just gross. Anyways, here's the conclusion to the greatest trick ever pulled. Manipulating gold and silver prices by spoofing futures traders and canceling them is one thing. Central bank intervention into physical gold markets to dampen the gold price is another. But perhaps the most far-reaching yet unappreciated method of manipulation is sitting there in plain sight, and that is the very structure of the contemporary gold and silver markets, where prices are established by trading in vast quantities of fractionally backed synthetic gold and silver credit, be it in the form of vast quantities of unallocated positions that are gold or silver in name only, or in the form of gold and silver futures which haven't had the slightest connection with the CME, approved precious metals vaults and warehouses. By siphoning off demand for real gold and silver by channeling it into unbacked or fractionally backed credits and futures, central banks and their bullion bank counterparts have done an amazing job in creating an entire market structure of futures and synthetics trading that is unconnected to the physical and gold-silver markets. This structure siphons off demand away from the physical precious metals markets, and in doing so creates a system of price discovery which has nothing to do with physical gold and silver supply and demand. And that's what I always talk about. Price, supply and demand should be the most influential factor for silver price. I mean, it has intrinsic value. It's a physical, tangible, it's tangible. But then one of the most influential price discovery, factors or variables is this imaginary trading of digital gold and silver that's non-existent on the COMEX. The saying is every ounce of silver you have in your hand, your actual hand, 100 other people theoretically own that same ounce on the COMEX. And that's why the saying of the stackers is, if you can't hold it, you don't own it. If you can't hold it, if it says it's yours on the screen, that's not yours. Someone else has that in their hand or in their safe. But anyways, this is just crazy. Apart from fractional reserve banking, precious metals market structure is perhaps one of the biggest cons on the planet. So next time you think of precious metals manipulation, remember that in addition to spoofing and secretive central bank gold loans, the entire structure of the precious metals market is unfortunately one big manipulation hiding in plain sight. Now, if you're new to precious metals, that might be like, why would I get into this then? Well, there's many different reasons why precious metals are the safest, smartest investment. It's a preservation of wealth. It's real money. You're putting your money basically in a time capsule as the dollar depreciates in your bank account, or the purchasing power at least. But there's also a lot of opportunity and potential. And even like this guy, saying manipulation finally could be ending, that's true. Especially with silver, supply and demand is the biggest and most influential thing. Physically, remember the last article said digitally there's this disconnection between prices. That's why you see premiums going up, but you're also going to see this new connection of the silver shortage or the supply deficits with silver solely that gold won't be able to keep up with, since silver is an industrial metal, and as we advance in this new digital technological era. That's why my name is Silver Slayer, not Gold Slayer. But regardless, gold and silver are both called safe havens for a reason. So yeah, I'm going to wrap this video up here. I know this was a longer video. If you have stuck around till now, pat yourself on the back. You didn't click off the video within 2 minutes thinking you know it all. Thanks for tuning in. This was Silver Slayer. I'll see you guys soon. Peace.